Hello, welcome back to My Network. We're at the Precious Metals Summit in Beaver Creek, and I'm joined with Kelly Malcolm, the CEO of Borealis, the latest gold mine to go into production in Nevada. Woohoo!
Go BOGO!
Go BOGO! Yeah, so obviously, look, quite an interesting story. I think there's a really interesting backstory to this in terms of the history of the project as well. So, look, I think as well, it's got just to note. Obviously, you've been on the channel quite a few times before, but that was with a different hat on. That was as VP of Exploration on Amex.
Yep.
Obviously, you were the guy pointing the drill bit over there and getting a lot of success. You've now taken on this new opportunity. Why don't you just tell us the backstory of the last 12 months?
Sure, it's been really fun. So we bought this project out of a private equity firm called Waterton. They were liquidating their assets. We got a pretty darn good deal. We paid $100,000 cash. Then we were to issue them 19.9% of our securities, which would have been worth about $5 million or so. I'm jumping in front of 12 months, but Rob McEwen ended up taking that whole block, so came in as a cornerstone investor. We've also raised plenty of capital, over $15 million, with people like Eric Sprott, a number of different institutions, put together a really good board, and went public. So that happened August 7th. We've been trading for just over a month now. It's been very well received. It's actually moving up, which often doesn't happen.
Yeah, in this market.
In this market. So no, I'm very pleased with how it's trading. Yeah. And looking forward to getting some news to the market and broadcasting the story and getting a bigger audience and some new shareholders.
Good. Look, I love this story, and I've been following it since I think around February, January time when you were still in the process, really getting this listed and whatnot. Let's just go back to the basics in terms of the history of this deposit, because obviously this was a project that was in production before. Mm-hmm. The project not necessarily had any problems. There was more of a debt problem with Waterton, right? And
I think so, yeah.
So this isn't as if this is a old care and maintenance mine that had a load of issues that you've bought.
It's a recently built mine that just stopped.
Yeah.
So yeah, the backstory, it's kind of interesting. It was like you said, it was 1980s. It was mined quite profitably for a decade by Echo Bay Mines, who is now a subsidiary of Kinross, actually, I just learned today. And the mine was fully reclaimed in the 90s. So in 1993, I believe, it was completely back to clean. So all electrical infrastructure gone, wells gone, ADR facility gone. And then in 2006 or 7, a company called Griffin Gold picked it up. They did some great drilling, found some nice mineralization, and then decided they wanted to rebuild the mine basically. So it did a pre-feasibility study. That was filed in 2011, and then started the mine building process, financed it, rebuilt the ADR, rebuilt all the electrical infrastructure, substation, power, water, etc., and then got into some trouble. Once in the first few months of startup, got into some debt with who became the owner, Waterton. Then it was embroiled in a bit of a lawsuit for around 10 years. There's a documentary about the asset actually on YouTube that's quite interesting. In the end, everything was granted in Waterton's favor by the courts, and we came knocking on their door a few months or 6 months after that had closed, and just made an offer, and we won.
Nice.
Won the bid, yeah. So that's the backstory. I think there's a lot of potential in there. There's like I said, 2011 pre-feasibility study that you can find on CDAR that looks quite attractive. We've got our own mine building team internally that's looking at revamping everything, modernizing all the numbers. Obviously inflation's happened, but also gold price has gone up a lot. So optimizing everything before we go into full production. But we are pouring gold, like you mentioned, from both residual leaching, and in the next few months we hope to start crushing a stockpile, getting that on the pad, and generating some meaningful revenue.
Yeah, nice. Okay. Look, why don't we just talk about, like you said, you've just listed within the last month, right? So
yes.
This has been an awesome experience just seeing that over the last month. And I'm sure the shareholders
We've had shareholders right now, yes.
Yeah, of course.
Absolutely.
Look, what's the plan for this thing? Let's talk about a little bit about what's in the ground. Obviously, you've mentioned that essentially you've got a full mine there in terms of the production facility, the ADR facility, the heap leach pads. They're all in top-notch condition, and you're pouring gold already. So in terms of capex expenditure, obviously there's not a lot to worry about too much. But in terms of what's actually in the ground and what the opportunity here is, why did you decide to take that on outside of just the infrastructure?
Sure. Yeah. So for me, I looked at it from an exploration standpoint out the gate. So really, it wasn't until we got to the mine site and realized how pristine everything was that the mining opportunity even really came into play. On the exploration side, I'm a geologist. there's real potential to find significant gold deposits. This is a storied, if you ask any geologist in Nevada, they know Borealis.
Yep.
It's a storied project. And this is non-current, non-compliant, but the most recent resource, it's not ours, it's not historic, it's not current, again, double disclaimer, was around a 2 million ounce or 1.8 million ounce endowment of gold at around 1.2 grams. And that's on one structure and then a portion of an additional structure on the project. There's a number of faults that have seen either none or very little drilling. When you actually, Verify does a really good job showing, so to your audience, check out the Verify site tour that we put together, but you can see the alteration and you can see the silicification, and then you look at the grab sample map and the geochemical data. I think there's real potential to make some significant oxide discoveries, as well as deeper sulfide discoveries at depth too. Yeah. So that's what really got me excited, and then we started running the numbers on what could be there in terms of production profile, and then I got very excited. So those are the two reasons that we ended up acquiring the asset.
So in this, again, let's remind everyone, historic resource, not compliant, but in that resource, what was the breakdown between the sulfide material and the oxide material?
Roughly half sulfide.
Yep.
It's just a lazy half sulfide, half transition, half oxide, or quarter transition, quarter oxide. Yep. So the oxide component, about 500 or so of that, of that 1.8 roughly. Okay,
so that's all material that you know about that I'm sure you'll do some confirmation stuff, but it's stuff that really could go onto the heap leach pad and really start pouring.
Yeah, if it fits into a mine plan and economics say yes, then absolutely. That would fit. Metallurgy's been done. It's a past producing mine, so you know that the recoveries work.
Yeah.
We've done some additional testing just for redundancy. Yeah. We did a 10-ton bulk sample. We've done a few other met test works, but yes, the answer is the oxide stuff can go on the leach pad. Okay. And then I know what your next question is, and it's probably about the sulfides. Never mind.
Maybe, but yeah, why don't we talk about that?
So the sulfide body that we have at depth often comes up in discussion. There's really amazing drill holes there. Like if you look at our presentation, 67 meters of 16, 67 of 6, 115 of 4, beautiful, big, wide hits of high-grade gold that is refractory, is not heap leachable, and the common question is, how are you going to make money on that? And the simple answer is you run it through a little mill, float it, take that float concentrate, which we've done the metallurgy to know that the ore is floatable, and then send it off to one of the roasters in Nevada. They basically burn it. That's what the roasters do. They burn it. We would actually likely get paid to have our ore treated there because we've got such a high pyrite content in our mineralization. So that's how you do it. And it's like anything else. You have to add that cost onto your mine plan and into your economics. But I know that some of our bigger shareholders are very, very keen, and that was one of the reasons that some of these guys came in to the story at all, was this sulfide component. So
just remind me of some of the best drill hits that you mentioned there into the sulfide component, because
the best one is amazing. 67 meters, 16 grams per ton. There's 67 of 6. There's 115 of 4. There's big numbers, big widths, big grades. Like those, if you put those out tomorrow, that'd be the best. Those would be the best holes released this year. They're amazing.
Well, talking about that, maybe you have actually already started a drill campaign to do some.
We have indeed.
So maybe, I don't want to put words in your mouth, but maybe we can see some best drill.
Our stuff's still pending, so we'll see when we get that out. Hopefully in the next few weeks or month or so, we'll get some news out to the market on the drilling. But yeah, we did do some confirmatory stuff. I'm hoping, fingers crossed, that we do have something like that. Even half of that, I'd be dancing in the streets. But the neat thing about this deposit is in the oxides as well. It's a high sulfidation system, and it's almost comes up like bullseye. So we have a number of different pits. You get your central core, where your mineralization is very high grade, very continuous, and then in the aureole to that core, you get your half a gram or so material. When these oxide pods are discovered, those numbers are exceptional too, like ounce plus material over big widths in oxide. So there's definitely some serious oxide potential hits as well. One of the ones in our presentation is 45 meters of 7.3 grams
in
or
the
so
oxides.
In oxides, which is on a dollar per ore basis, or whatever the terminology would be. That's a much more valuable hit than those big sulfide hits, just because of the ease of extraction.
Well, something else I really liked about when I first heard about this story was it wasn't just how good, obviously, the infrastructure is already there and the processing capacity and obviously the resources in the ground. There's an opportunity here that I think you've envisioned where you have this infrastructure, you could be a consolidator within this area. And I wouldn't mind just talking a little bit.
Yeah, no,
about
happy to talk about that. It is a fundamental part of our business. And like, we didn't talk about who's who of the company too, but we've got mine builders and company builders on the board. Tony McCooch, Grant Gibson, Bob Buckin, Rich Patricio, Christina McCarthy. Like, these are people that have built successful large mining businesses, and those are built. Yes, you need great projects and great assets, but these big companies are built through acquisitions and through growth, both by the drill bit, but also by the boardroom. So we're looking at things that are kind of unique to things you wouldn't really think of as M&A targets necessarily, largely because the bigger companies wouldn't really look at them. But smaller assets, so sub 1 million ounces, absolutely, which is kind of the threshold to even be looked at by some of these bigger groups. So sub 1 million, low capex, high IRR, and the potential to produce 30 to 50,000 ounces per annum. That's kind of my dream project right now in Nevada, or very close to Nevada, where we can then utilize our ADR infrastructure. And we were talking about this earlier, but the neat thing about having that ADR facility is when you're looking at these smaller projects, infrastructure is your capex killer. So you lose, like, if you wanted to build a full ADR facility, substation, electricity, on, let's say, a 8-year mine life project with 30,000 ounces per annum, it's impossible.
You can't do it.
So you can bring the capex down significantly by looking at things where you just bring a generator to run your heap leaching operation. You build heap leach pad, set of carbon columns, and a single pond, and you'd ship the loaded carbon to Borealis' ADR facility. And the neat, we were talking about this too, but the neat thing about that is the cost per ounce is peanuts. When you have loaded carbon, it's like 50, 75 ounces per ton in one of those big sacks of carbon. So it doesn't really matter how far you ship it. So you can look a little further afield than you would compared to like a toll milling scenario, where you're kind of limited to a certain mile distance from the facility.
So essentially, the way I always look at this is, obviously, before a project does get up to that 1 million ounce mark, especially in places like Nevada, my opinion, they're like most things in junior mining, that's just explorational development, they're pretty undervalued. They're pretty...
They are. It's largely because they get stuck in a rut. You can't raise the capital to build that. You can't raise the $30 million you need.
So in a way, this is quite an interesting way of doing it, because like you were saying, you can, with your ADR facility, and we'll talk about what we want to look like in terms of the production output of Borealis within the next couple of years, but in terms of scaling up your own project through, obviously, the drill bit, like you were saying, you're able to, within a 5-hour, 6-hour radius in terms of driving, this is a huge radius, basically most of North Nevada.
You got it,
You can pick up pretty unloved, but great projects. Just
market
that really don't work within anyone else other than a company like yourself who already has the infrastructure.
And look, bigger companies could do this exact strategy, but for them, what's $10-15 million a year in free cash flow? It's almost meaningless to a lot of these companies.
But you
do this with 5 or 6 different assets. For us, that's one heck of a story pretty quickly.
Well, let's talk about that. So, say for example, just through your own resources and potentially through M&A, what's the capacity of the ADR facility if you were going to be putting the loaded carbon in?
Yeah. So according to our COO, Andreas, he thinks it's around 60,000 ounces per annum. It's a little bit tricky because it all dependent upon how loaded your carbon gets, the grade and everything. But you're really limited by 2 things. Number one is the amount of carbon columns. So the easy answer to increase it is get a few different columns. But the longer and more truthful answer is we'd also have to do some upgrades to our EW cell and probably upgrade our electrical infrastructure a little bit, because the EW, for those that don't know, of course, electro-winning cell, which basically it's you plate out. So you have your cyanide solution carrying gold, goes into your carbon. The carbon strips the gold out of that cyanide solution. You then have loaded carbon. You treat it to strip the gold out of the carbon, and then you end up with a slurry that you put through your EW cell or electrowinning cell, and it basically plates out the gold into a solid form that then goes into your furnace. But that draws a lot of power. It's an electro-winning process, so electricity is the key component there.
Is electricity quite expensive in Nevada, or is it?
Not bad, no. It's fine. We're right on NV Energy's grid.
Okay.
There's a ton of solar. There's actually the biggest solar farm I've ever seen between us and another listed company called Lahontan Gold. They're actually closer to the solar farm, so it's not egregiously expensive at all in Nevada.
Good.
And like it's such a low tax, low cost state because of the royalties or the revenues from gambling and mining. It's a relatively cheap place to work.
Yeah, fun place to be.
Yeah.
Okay, well, look, in terms of the future outlook, in terms of the next 12 months, obviously you're trying to ramp up towards more of a commercial state of production, right?
Yep.
You've got an ADR facility that potentially can get up to 60,000 as it already stands. There's M&A opportunities. I mean, talk me through what the game plan is, because like you said, you've got a lot of really good institutional investors. You've got some really good backers like Rob McEwen and Eric Sprott involved already in this. And to me, the risk with the old project was obviously burdened with debt. As far as I'm aware, you've got no debt in the company whatsoever at the moment.
No.
So where does this?
We have a liability, but it's a bond, which every company in Nevada has, but there's no debt.
But that's to do with the state laws and things like that.
Yes.
Yeah. So what's the opportunity here within the next 1 year, 3 years? Because it sounds like you've got a pathway here to actually become quite a meaningful producer.
Yeah, if we execute, which obviously I hope to, our board has executed in the past very, very successfully. The dream path is make some discoveries at Borealis, increase the overall ounce count, and prep and permit those for extraction. Do that with a few other projects, acquire in the next 3 to 5 years a pathway, get us to a pathway where we can produce better than 150,000 ounces per annum, which is that results in quite a big company.
Yeah.
And especially if you're doing it at a low cost, high margin, and making real money.
Yeah.
So that's the dream, is 3 to 5 years, pathway to that production profile. Whether we're there or we're just waiting for permits on certain things, I don't know, we'll see, but yeah, that's the overall dream.
Good. Look, I'm a believer in the dream, and I'm confident personally that I think you're gonna make something pretty special here. So Kelly, thank you for the update.
Thanks so much.
Cheers.
Pleasure.